Welcome to The Deal, our quarterly outlook on the M&A markets. Global M&A activity has boomed in the first half of 2021, hitting an all-time high of $2.8 trillion and up 130% on last year. An extraordinary turnaround from where we all were in the depths of the pandemic this time last year. With interest rates remaining at close to zero and looking to stay there well into 2022, and in an environment where treasuries and corporate bonds are yielding close to 1% and 3% respectively, investors continue to keenly chase higher returns. This is resulting in record levels of institutional capital flowing into corporate finance, and it's driving M&A activity. We don't see that situation changing in the second half, and 2021 looks set to break all records in terms of deal activity. Combined with very high levels of private equity dry powder looking for investment opportunities, these capital flows will continue to drive European deal making. Private equity had its busiest period ever in the first half of 2021. Over 6,200 deals worth more than $500 billion completed as buyout groups acquired companies that have successfully navigated the pandemic. We anticipate ongoing interest from private equity in a broad range of UK-listed corporates whose share prices have been impacted by the debilitating combination of Brexit and the pandemic. UK PLC looks good value when compared to the US and European markets, and private equity completed more deals in the UK this year than at any time since 1980. The number of UK buyouts is up almost 60% compared to 2019, according to Refinitiv, accelerating a longer-term trend of public to private transactions, where the number of UK-listed companies has reduced by a third over the last decade. As a result, we're seeing a lot more boardroom debate this summer around how to respond to that potential opportunistic takeover approach. In a low-growth environment, public companies are turning to corporate finance to drive higher shareholder returns and to accelerate their digital, e-commerce, cloud and cyber agendas. We're also seeing companies accelerate the speed of their decision-making, and we see that underpinning high deal volumes in the second half. Undoubtedly, with valuations at close to record highs, there's also a range of corporate sellers concluding that market conditions are unlikely to improve markedly from the current highs, and the potential for higher future tax rates is also propelling some private owners to bring forward planned exit and sale discussions. We are seeing an increasing focus on environmental, social and governance issues in companies' M&A agendas, including using acquisitions to meet ESG goals. Examples include improving carbon footprints, improving supply chains, the sale of assets that could become obsolete due to ESG issues. Sectors seeing strong activity include renewable energy, sustainable food innovation, waste recycling, and electric vehicle infrastructure. Having a developed and clear ESG strategy, it's no longer a nice-to-have objective. It's increasingly central to many companies' shareholders, customers, and employees. All these factors are combining right now to produce incredibly strong market conditions for M&A. Are there any dark clouds on the horizon? Inflation is the number one concern for many central bankers, and its potential to require interest rates to rise and central bank support schemes to ease back. More broadly, markets continue to assess the pace at which lockdowns are easing across Europe and the potential impact of new variants on the pandemic. Thank you for listening, and I look forward to speaking to you in our next edition after the summer.